can you explain why the U.S. 10-year yield is climbing? Shouldn't it be falling? So when people are selling treasuries, there has to be a higher interest rate in order to incentivize people to buy them. So as people sell bonds, the interest rates have to rise to meet demand and incentivize people to hold them. So that tells me that people are selling the U.S. 10-year Treasury if the yield is rising. Now, that's concerning because people believe that whatever the interest rate is it's paying out is not high enough for where yield or prices will be in 10 years, or that they have a better opportunity somewhere else. You're going to see a rotation out of those treasuries and other short duration and long duration U.S. treasuries when the reverse carry trade unwinds. There's going to be a rotation from our treasuries into domestic treasuries there in Japan. They hold about $1.6 trillion of U.S. debt that will be flowing onto the market. And stablecoin issuers will be the ones buying that debt. A lot of that is short duration, what's owned there by Japan, and that is exactly what's needed to back the stablecoins here in the U.S. per the Genius Act. So there will be plenty of demand for U.S. Treasuries, but it'll likely be at a fairly high interest rate. Let's take a look at what the U.S. 10-year Treasury is. We're currently at 4.257 on the 10-year. And it's not really rising that aggressively. I mean, we were back down at 4 just a few months ago in October of 2025. And then we went up and we pulled back again around to 4% at the end of November. And since then we've moved up kind of aggressively from there back to 4.2. So, it's a 5% move over the last, call it 30 days. A little bit longer than that, 45 days. It's not overly crazy.